82. Yeah, I saw that too.
Yeah. That's not included in our overall, is it? It's not here.
No, it's not in our levy. That's that special.
Yeah.
It would be like the 165,000, I think. HRA would be, right?
HRA is what?
The HRA and 165 for EMS, that would be all come on that same line item on the taxes.
No,
No,
not
just
the-
the HRA?
Yeah.
Okay.
The other line item that I kind of noticed when I was going through my notes again was the cleaning wasn't put, or the LEC was not put into any budget. So that would need to be another item.
We know it's in on the bills. First month. These bills, it's in there.
But that's not a line item that's in the budget,
In John's budget.
in John's budget.
I've asked this question before and I'll ask it again, the tax rate, the 2024 tax rate. How is that defined again?
Or
Per property, it's our 2024 tax rate. How is that defined? I see it under net tax capacity, but this rate here.
Which number? Oh, no, my question
Is that
up here.
the ups and
So how do they?
no, so that's the,
See back years.
so when we're talking about tax capacity.
Yep, net tax capacity, that's the rate.
Yeah.
Or the net tax capacity.
So then what they do is they take the.
We do it every year.
levy and divide it by the net tax capacity.
That would give that's where the rate comes from.
So I'll call a meeting in order, the truth and taxation meeting, Grant County. If we could stand and say the pledge of allegiance. Pledge of allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Hey. Chad or Carl, you want to start out with anything, or do we just freewheel it, or how do you want to do this? You were answering a question there that we were trying to figure out the answer to it, so do you want to talk about that tax rate capacity, how that's?
So what they do is they look at the net tax capacity rate, so that's the. So when every property is classified, it's, 1%, 0.5. Then what comes down to is tax capacity rate. They take that divided by the levy. And that's gonna calculate a rate. Or the county, the school district, whatever it is.
All taxing authorities in the county.
Well, this would just be the county portion.
Great.
So the
Just
fact
this county.
that down for 25 has to do with the $15 million an increase in
The $11 million in new construction.
construction, that, because you're applying a lot larger number to our proposed budget.
Right.
Resulting in the lower percent. Which then that gets applied to the new value of the property evaluation. that clear for all of us?
Not really.
Until next time.
There's a lot that goes into the tax capacity changes.
Yeah.
It's not just new construction.
No. Chad, I was looking like back in 2007, it's 0.937. And then,
That's your regional library.
what's that, Troy?
That's your regional library. Your tax capacity rate was 60.136.
Your total is 60.136. So the easiest way to explain this is every single, just like Carl said, every single parcel has a valuation and a classification attached to it. And we can use kind of the three main ones, I guess, that we focus on would be residential, agricultural, and commercial. So if you took a residential home that had $100,000 value, that home is taxed at 1%. Or it's the net tax capacity of that home is 1%. So for figuring the tax capacity, it would be valued at 1,000. Okay. Now, if we had a commercial business and they had a value of $100,000, that is at 1.5%. So their tax capacity wouldn't be 1,000, it'd be 1,500.
Right.
If we had agricultural land under the tier, all these things have tiers, but I'm just talking about under the tier. Agricultural land under the tier is at 0.5%. So if you had $100,000 piece of agricultural land, it would be 500. And then we add up all those smaller numbers or those tax capacity numbers, and we get the tax capacity for the entire county. That in turn, we take the levy, divide into the tax capacity, and that's how you get your rate.
So those, if a residential, and that's before credit, homestead credit, right?
Exclusion.
Exclusion.
Yeah, they call it. So that's one,
You know,
and then it's 0.5 and 1.5 and whatever. Is that ever changed? Has it always been one or?
well, some of it changes, but a lot of it's on tiers. It's been the same for quite a while.
Right, the state, or is that a local issue?
No, that's it.
That state?
Yeah.
Okay.
And then there are, you have to help me again, Carl, on how many classifications, 80?
Yeah, there's like
Those are three type property
80,
types. There's like 80 some different classifications of property and they all have a different factor. So if you're residential and you apply for blind and disabled, you get this reduced. There's all kinds of them. Those are the three big ones we deal with.
So like a commercial bank could be different than a laundromat.
But there's different rates too, so 0 to 150,000
In
Pays.
commercial.
for commercial pays a certain rate. Then from 150,000 to 300 pays a different rate, and then 300,000 and above pays a different rate.
Oh.
And it depends on which bucket they pay into as well, on each different tier. So we're trying to keep this simple.
Yeah.
So let's talk about the budget. Each of us had a chance to look at it. Do you have some questions for Chad or Carl or ourselves? So we can, when we come tomorrow morning, some understanding of where we want to be.
So in assisting with the budget, and I feel like that's what I have done with this year. Chad has been the one to prepare all the numbers and to prepare this stuff. What I've been busy doing the last 2.5 months is going and actually visiting with every department. Dwight and Bill and I, went down to the highway. We went through the highway budget. Kind of explained the process of how they budget and the difference between budgeting for roads and budgeting for townships and also their people, and how they can allocate that to CASA money. It was definitely an eye opener to me to see how they budget and how they go through their year, and where those monies that they collect go to. So that was very interesting to me. I still think there's more deeper dive into that as well. But again, this is a good way to get my feet wet and to start understanding how they budget and where those dollars come from. I also met with Chad and we talked for many hours on kind of when we started at the beginning of the general government or the county-wide.
Could I ask you a question?
Yes.
There, you referenced highway.
Yes,
So I got a question. Is this a typo where it says the difference between 23 and 24? The second set, the second.
total expenses.
So right here, so on this one, on the bottom, it's 24 and 5. Here it's a difference between 23 and 24. Is that a?
You do yours. Right here. The first one,
I'm guessing it's supposed to be 24 and 25 at the top, and the same
Like
should be in the
the
bottom.
difference here.
You agree?
This
that
number, you think it should be this should be 23, 20, or 24, 25.
It should be, yeah.
I don't know that, but I'm guessing that. I don't do this.
No, I was, and I kind of knew that. I'm just wondering if it is right, then why would we make a reference to 2 different years than the rest?
I'm guessing he, just like all of us do, he copied and pasted from the report, if we have to change it.
Right.
Okay, go ahead, Carl.
So we went over just kind of how the funds are for countywide. And through the Board of Commissioners, basically kind of the big ticket items. We went through a lot of the funding for the 800 megahertz system, the change makers, basically how all those different line items kind of look. Again, it was kind of a learning experience for me. There's definitely some things that I say, yeah, I understand why they're all together, but it's something that Chad's done for a long time, and I think he's done a good job of doing that. And he understands it because he's done this for so long.
It is.
It's not gonna go boom.
Jesus knows what I should read.
Well,
But one
I'm saying it's right, it's just wrong.
One thing about the county-wide and the county commissioners is that when I go back and I look at 23 and I look at 24 of what percentage of the budget, that's probably the largest area of difference between what's budgeted and what actually occurs. Because there's a lot of items that get purchased or spent out of those funds that aren't necessarily as budgeted for. Discretionary spending. Yeah.
So Chad, under the 224 actual, is that through a point in December where we're approving bills or?
That would be through 13th
of December. Okay.
The good numbers is we have through the 13th of December.
Sure.
And I can go through. I know Carl's very analytical.
No, it's a
And
compliment.
you
Carl.
can look at all these numbers all you want to. However, they will change tomorrow. They will change the next day. And it's not something as when Carl came over and said, so I take that number and divide it by this number. At that time, we were working through on August or whatever it was. If I divide that by 8 and take times 12, because so much of this stuff comes once a year, comes twice a year, comes quarterly, we're talking about revenue. A good example of that would be, our county program aid. It is, what is it today, the 16th, December 16th? If you look at our county program line item, you're gonna go, holy shit, we're really, really low. Because we'll probably get the second half of our county program aid on December 28th. You know, so much of it is, I know you want to analyze, but unless you know when those monies are received or when those monies are being spent. There's value to this as long as you understand that some things aren't
It's just a snapshot
done
of
every
time.
month or done once a year or done exactly.
Right, so
I
you get,
showed Carl an example, it was December 4th, December 3rd. I don't know what day it was you're over there, it was early. Yep. And I was balancing out November. And we were looking at cash balances, treasurer's cash balance. And in 4 days, our cash balance changed $3.7 million. For 8 days. So if you ask me on November 30th, yeah, but come back on December 5th. It's $3 million difference, because I just wrote out checks for $3 million. So, it was hard for me to explain things when, yep, well, that number looks weird because it is weird because that one we paid out in January and now don't divide that one by 12 because that one's done for the year.
right,
Don't divide that one out by 12 because we're gonna get that money in the last week of December. Don't. You know. If you look at the thick one that's got all the county stuff on it, or it says user selected. It's the big paper, binder clipped one. When you go to the way back page, here's an example. I think it's page 47. Our total budget for all the funds in the general fund in 2024 was $6,513,390. That's revenues, expenditures. Right? Through December 13th, you can see we're over like $1 million. I can go find those. Those are things that were either unbudgeted, that don't have budgets, that aren't really tax dollars. But if you look at where we're at, it's $187,000. We're basically in the hole. Again, we're gonna get county program meeting money. We're gonna get all these things. By the time December 31st rolls around, that number is gonna be really close to zero. It's gonna be washed out. And that's all of these departments that somehow, some way, even though that one's overspent, that one's underspent, that one's right on, they'll wash out at the end of the year, because what I concern myself with at the end of the year is the general fund. I don't really care if the utility or the county buildings paid for the cleaning bill, or the sheriff paid for the cleaning bill, or the auditor's office paid for the cleaning bill. We're all general revenue. You know?
so just to be clear, doesn't the first half of county program may come in July?
Yep.
And then the other half can be, whatever, you're right, 28th, 29th, 30th, whatever that,
Hope I'm right, because I've done it 21 times.
yeah, I believe it. So just to be clear, for the revenue, they split it in half.
Sometimes,
And that's really what I found
unless
out.
it's 2008,
Yeah. It was 134,000,
then they don't send you the second half.
no,
But I do think, and I agree with Chad and the fact that he's done it. You have the best understanding of this. However, when we come to budgeting, there is a point of some accountability within our departments. In our
100%.
What's that?
Yeah, 100%.
Yeah. and
I don't
so-
do all their budgets.
No, and so from an umbrella overall, but then within that is it does make a difference. Who's paying the cleaning bill, because if someone's not, we just identified the cleaning bill's not in a budget. Well, if we just willy-nilly that and say, well, it'll come out of something, That's what, I don't know that we wanna willy-nilly. Pretty soon we got $50,000 of willies and nillies. So there is, but you see a different picture than we do, I think. I believe you do.
Not really.
Well, you have a
I
better
sit with-
understanding.
I sit with every one of those departments and go through it. So if something's not in there, I'm not saying I monitor what they're doing. We just go through everything. I can tell you about the cleaning. When we did budgets in August, nobody knew what was going on.
Well,
If you ask anybody in August, who's cleaning your building, Sheriff Combs. If he was sitting in this room, none of us would have had the answer to that. Cause we didn't know if it was a contractor, if it was gonna be Greg or Jeff and Bradford, it was anything, so yeah, we didn't put it in.
Yeah.
Nobody knew. We can only put on paper what we know at the current time. And up until what, a month and a half ago? Still didn't know. Middle of October, nobody knew. But there's so much stuff that comes in, and it's great. Looking at this stuff is wonderful that everybody tries to understand it. Know some numbers, know some things. But I've also said to Carl, starting January 1st, I'm gonna make a list of every item that comes through our office that either I'm writing a check for or that I'm receiving in as revenues that is not in the budget. It'll blow your mind.
Oh, I believe that.
It'll blow your mind. There's so many things that aren't budgeted, whether that's revenues or expenditures every month. If you try to scale this thing down so she's tight and perfect, by February, you're gonna lose your mind. You just gotta trust the system.
Yeah.
And we're right, every time we do an audit in the general fund, we're right on. But
So there are some items. And we talked a little bit about it, this insurance that's going up. Not in here, right?
Right.
And so,
I'm gonna stop you for 1 second.
yep, no,
What you have here is the same as what you adopted in September.
yeah, I checked
So,
that, I realized.
yeah, so we
We
didn't
did not
change,
know
I
that.
didn't, so we didn't change anything since
No.
September, just so you know.
I was wondering it, so I checked it, I agree with
No,
you.
we didn't, I asked Carl, I said, am I supposed to change anything? He said, no, this is the way the T&T statements went out,
Yeah.
this is what we're gonna talk about. So I said,
So what's the
okay, fine.
insurance going up? Over on
Figured 17,
17,000.
it's like not. Is it
Yeah.
material? Probably not.
$17,000 is a lot of money. But I'll go back to the same story I tell all the time, that in 2018, we wrote out a check for $175,000 and our reserves went up.
Yeah, I'm not saying we should add it, I'm
Well,
just
we
saying
can't,
that we should,
it's,
oh, we can tomorrow.
add it where?
You can't add it, so
We
you
can't
levy
raise the
more
limit.
money.
Oh, no,
It can only go down.
Excuse me, we can't,
You
We
can
gotta
change
change
your
it.
budgets, yes.
but
Yeah.
that's not.
That's a
gonna-
Well, in reality though, if you're gonna start changing your budget with updated facts, put it on the agenda for every 2 weeks.
Yeah.
Just like Chad said, when we change it, it'll truly become a living document that is gonna have to get changed every 2 weeks.
You know, I can tell you that in 24, I can name you probably 2, 3 different scenarios of things that were unbudgeted that were in everyday life would be very significant.
Yeah.
We gotta check, how much was the CPT check, 45?
Yeah, I was in there
It
at
was
40.
45, something like that. I have 45 written down. We have no idea that was coming. You
We
know,
didn't-
when we adopted a year ago, we didn't know we were gonna check for $45,000.
July, it was being looked at.
Yeah,
So by the time we met again in September, too late, it's already, I mean,
Well, but I
preliminary
mean-
already set.
but I mean, we got that check this year, it had nothing to
Yeah.
do with next year's. So when we sat here a year ago, we didn't know we were gonna have
Right, 'cause like I said, the first time it was really talked about
Yeah.
was July of this year.
of this year, yeah, so I mean, do we put it in as a revenue for 25, thinking we're gonna get it? I would suggest no.
No.
And if we do get it, it's gonna be a CYA thing when somebody walks in here in March and says, I need money. Well, where are you gonna take that from? I don't know, it'll work out.
So I noticed most of the departments had an increase in computer, is that anticipating a server? Or just a new, just
It's
What?
anticipating
we need to update.
It's anticipating more costs from the computer fund because we're gonna have to buy some equipment. And our computer fund took a pretty good hit last year.
Okay, so that. I
And
kinda
right now, at
forgot
the end of the year, we're gonna be at about 0 or less in our computer fund.
Okay,
So we need to establish that back up again.
sure. So I got another.
The alternative to, we've talked about, the alternative to a computer line in everybody's budget. Cause what happens with the computer fund is I'll go through and I'll look at, we have two major things that come out of there. It's the payment to Morris Electronics, to Sean Larson for all of his support, which is somewhere in the neighborhood of a little over $100,000 a year. Now Western Prairie chips in and pays half of that. So it's a great deal for us and it's a great deal for them because we don't have independent contracts. And then all of our stuff from CPT, which is like 7,000 a month, so whatever all that works out there, that's for our tax system. It's for payroll, it's for financials, for all of this stuff we use.
Gamma systems.
GAMA system for the assessor, it's all the tax stuff and the payrolls.
We have cost, right, I believe.
Yep, and the highway, that's financial, yep. So those are the big things that come out of there. We also have, you know, the internet connection, the T1 line, we've got it. So that computer fund will go through probably $200,000 a year. Pretty easy. Now, you don't see that on here, because then what I do is I take that wad of money we're gonna have to collect, because we're writing bills out of there, and we divvy it out to all the departments. And right now, it's based on how many workstations you have primarily, that's how it's divvied out. The alternative to doing that would be saying, put another line in here, just like we do with GIS. GIS for a long time was buried in somebody's budget. We could say computer fund, or computer line, or computer whatever, and now you're not gonna bill that back to the departments. But we're just gonna pay the bills and be done, right? The fear with that, there was two things why that never happened in the past. Number one, it was a fear by the departments, and I'll be upfront, it was a fear by the departments that the county board was gonna look at that line and say, holy shit, that's too much money for computers. Well, you can't slash it, we need it to operate, right? And number two, it was a cost allocation factor, because when we had social services here, social services got a portion, a percentage of that money. The overall money, and then they were recovering those funds from their reimbursement from the federal government. So we didn't wanna just take it all out of general revenue, because now we're losing on our federal money from social services, so. Yeah, you don't see the big number because it's buried, it's a line item in everybody else's. We certainly can just get rid of that and say, here's our computer line.
No, it makes it, so I got another question. And
Well, but let's stay on the computer, and I talked with Carl that I would be in favor of going to having a computer line. But with that, we then have a replacement schedule that we adhere to. If there's an exception, Carl and I talked about if there's an exception, that's gotta come to the board and get an exception, because part of that whole cyber event is if you have old machines, MCIT doesn't insure them. So anything over 3 years old, they said was out of useful life.
Yeah, they wouldn't reimburse.
So there was no I mean, we're paying insurance and we had these machines we thought were insurable, but their reality, they weren't. So I mean, this board, if we could say it's a 4-year, 5-year replacement schedule, whatever, we just have to know we're now running on borrowed time. We're running machines, we're running 40, if we go 5 years, we're running 40% of our machines that are uninsurable.
But what are they, $1,200? These laptops,
3,200,
huh?
3,200.
3,200 for a
No, not
laptop?
for everybody.
That's
No.
docking station, that's,
Mine, when we got ours, I think they were 14 or 15.
So I guess I remember that discussion. To me, if you're talking $1,500 and you got 3 years of coverage, we wouldn't buy insurance on it anyway. It's not.
Well, the fact of the matter is, if we don't get, not to really go down the rabbit hole here, but if you're sitting with a 4 or 5 year old machine and if something happens and they don't cover it, we're probably gonna replace it next year anyway.
Yeah.
I mean, it's not To me, that's not the.
I like to schedule.
No, we're talking about, if we're talking about vehicles and buildings, that's a whole different story.
Well, and I mean, like I said, that's fine, we can make those decisions, it's just the board needs to be.
Yeah, you may not, if something happens, you may not recover all of your claim.
No, question is, Troy's comment, is that something that we wanna be talking about for 2026 or 25?
Schedule?
Okay,
We don't have time to pull in.
that's kind of what I thought.
No, if it works, don't fix it.
So I have a
That's right.
question on extension,
Get
and
it.
Carl said that we had a meeting, and I can't remember it, that bill that's going up 100,000.
For what?
The extension, 4-H coordinator, did we approve $100,000 4-H coordinator?
Yeah,
Yeah,
We did,
yeah.
okay,
this summer or fall.
It didn't go up 100,000.
no, but I mean, we had spent 60 and we budgeted 80.
Well, there's a prime example. We spent 60. Guess what's in the bills to be paid?
Oh.
A $27,000 bill
Okay,
for the fourth quarter of this year.
so that would equal a budget of 80 then, which we had, and now the new budget is 100.
Yeah.
Okay,
Yeah.
that makes sense.
Did you think they were gonna leave money on the table?
No,
I mean, that's what I'm saying. These are great, but we almost, if we're really gonna look at these, you almost have to go line by line by line by line, because in your bills that you have, there's a thing in there
Yeah, I
for
didn't-
regents of
I didn't get through all
the
the bills
university,
that I got
Yep.
today.
and that's not in here.
And I've
You know, they're,
found that it's better to look at 3 years back and look at the progression than to look at just strictly this 1 year. And I think a lot of offices are budgeting that way too, they might budget $35,000 in it this year, and they might have done it the last couple of years, and you're saying, well, you haven't spent any money, why? Well, it's because they know in next year, there's gonna be a $90,000 bill coming out of it.
Is there any other questions on the budget? Carl, anything to add?
I'll just say. Go ahead, Carl, I didn't mean to cut you off. I'll just say that for the most part, there wasn't significant changes in the budget, meaning no like large capital purchases, no this and that. So when we do these budgets, if you look at all this stack right here, this one, what I will do, and I've done it this way for years, I know I have the wage schedule for 25 that I get from HR. And so I have a master spreadsheet that looks something like this. It lists by department all the employees. So I know that if Carl was hired April 13th, these are the number of hours worked between January 1 and April 13th, and then from April 14th to the end of the year, that's so many hours. So I know that he's on grade X, step X, and I plug that in. So it figures the wage as if Carl was gonna be there the entire year and work all the normal hours, right? So you didn't, and then we look at overtime, and then we look at all these things going after that. Then there's longevity pay, then there's the FICA Medicare, and then PERA. Those rates have changed in the past, so I know what the rate changes are. By the way, there is none for 25, everything's the same. Life insurance, long-term disability, all those rates I have, so I can fairly easily put together for each department, these are what your wages are projected to be, as long as they're fully staffed. And we don't, you're.
As expected.
Yeah, you don't have some weird thing happen where all of a sudden you hire another employee
Or short two deputies?
or you're short 2 deputies or whatever it is. I can't predict those things, and neither can a department head at the time, a year out.
Or you add a new employee.
Yeah. The only real wild card is at the time that we do that, this is what the union contract says, or this is what the county policy is for cafeteria plan. That's kind of out of my control. If we make a change after that, it is what it is, right? So in the general fund, between, I gotta do quick math in my head, Carl. 1.8 and a half and Oh, shit, I didn't pull that one. We figured it out.
Or are you talking the wage?
Just wages was like 6.2 million, we estimated for the county, wasn't it?
Right here.
Is that highway number two? Oh, right here, right?
Yep.
$6,341,000 is wages and benefits. Thanks. And we know those are gonna go up. Unless we have vacancies. And they were, back and looked at, I didn't go back and look what we budgeted for 24, we're just looking at 25, or was that 24?
We looked at 22, 23, and 24.
So we know that if $6.3 million is just wages and benefits, and our total expenditures proposed in 2025 are 21 million. A large, road and bridge, a big portion of that is streets, highways, right? But yeah, our levy is probably gonna go up unless we find some other revenues or we cut somewhere else. I mean, it's just a fact. And if we are gonna try to hold a zero levy, well, eventually things are either gonna get cut or we got another source of funding coming in somewhere that we need to have in order to maintain it. So, it's pretty easy. You take 3%, which is low on $6.3 million, and it's.
But it's not 3%, that's the COLA.
That's what I'm saying, that's
Another
low
you got another 275.
for the
for
step.
step.
Yeah, that's what I'm just saying, even at 3%, it's low, but it's still a lot of money.
But realistically, you gotta figure 6% increase.
When I was doing it, I was always figuring like 5.5 or some weird thing, but I think that's now.
You can, because.
Now,
you'll
some of
turn over.
those people, for a while, some of those people were on the end, well, now we're back over here
Cause
again.
you can figure it a little lower because you have turnover, but
Yeah.
now you also have to figure in safe and sick time.
Yep.
We're gonna have to figure in paid family leave.
Is there anybody on the board that wants to look at cutting this 4.8 whatever percent increase tomorrow morning? And if there is, what would you be looking to cut?
You could do one of two things, three things. The budgets are drafted as a guideline for the departments to go by for the year, for them to operate that department.
Yeah.
So I'll just use the auditor's office, you say, okay, your budget is X. Everything in my budget has to come out of tax dollars. I don't have
Revenue.
other revenues coming in,
Nope.
right? So let's just say our office is, I can look here, I suppose. Where the hell am I? $370,000, my office. Well, let's say that the county board says, yeah, we're gonna adopt your budget. You leave it the way it is. But we don't like our levy the way it is. So if we add all these up and it says that we've got a total requested levy of 8.5, just about $8.6 million is what we think we had to tax everybody in this county to make this thing wash out. We don't like that. We're gonna adopt our budgets, kind of thinking maybe we won't spend all the money in those budgets. So we're gonna set the levy a little lower. And, maybe we're gonna set the levy at 8.3. We'll set the levy $200,000 less than what the budgets require. At the end of the year, maybe we'll find some extra revenue, or maybe we won't have this expenditure, or maybe, right? So you can do that. You don't have to set the levy at what the budgets require.
No,
That's the first thing.
I see what you're right.
Number two, if you're gonna start cutting levy to match the budget, this is where you're gonna do two things. Either you gotta cut, or you gotta tell me, hey, we get this other money coming in, so jack up our revenues to offset. One of the two. And right now, I don't know where the other revenues are. Unless you guys have some other inside information.
Well,
So every 1% is $82,000. If someone's looking to try to find less than
Yeah.
4.8,
Yeah, if you wanted to get it down to,
it's 82,000. The question I have is, if there's a passion to do that, we should talk about it. If there's not, then we'll come tomorrow and,
No, let's do it. We're here. Let's talk.
Yeah, I don't care.
Can I talk about the fund balance or the monthly balance? And I got this as of last Friday from Jamie. And I just wanted to see where we were talking about, it seems like the fund balance continues to grow. Well, so in 2022, the fund balance was 17,449,718.95. In 2023, the fund balance was 14,728,943.12. As we sit right now today, our fund balance is 14,643,569.74. But again, that doesn't include the other monies for the revenue that still hasn't come in yet. So the balance is not climbing.
Where
It's
was
not.
that other $3 million?
Between 22 and 23.
Right, so was that County Road 10 money that was sitting there?
It could have been.
Sure.
I mean, without knowing where that $3 million is, I'm gonna throw those numbers out of my head, because we had in that time frame, we had large expenditures out on that road that we could have had the federal money in, we could have borrowed ahead for state aid money. We could have had a whole scenario of why we have $3 million more that one year than the next two.
What was the first year?
22 was 70,449,718.
That's what it is. I can tell you what part of it is. County Road 54.
Yeah,
Only got a check for 7
$7.7 million.
Yeah,
turn back money.
I mean,
that turn back money.
we spent some of that on,
Some?
No, we spent it all, I think.
You got the
Probably two.
detail on there? Which, you
on
got just the total, or do you got the detail?
I just have the total.
Two.
Well, I can
Two
tell
and
you
a
right
half.
now, when I did my balance at the month, when we looked at it in the beginning of December, there's $1 million in the highway account right now.
When he's got.
So we spent a lot of it.
Well, he's using $1.897 million of turn back money in the budget
for this year or next year.
next year.
Next.
So if it's not there,
I'm just saying, in December,
because we had
there
this,
was $1 million in the general fund, cash.
well, where's this 1 million?
Good question.
Mark that down in your, to ask.
Now, maybe they spent a whole bunch of money on something and they're waiting for a check to come in, because I know they've been working with Jamie
Yeah.
to get these reimbursables to come in, so I can't
Well,
answer.
and that may be have we received the federal money from
Exactly,
County Road 10 that will backfill that?
yep, those are questions I can't
One
answer.
thing I think we can be assured of, and Matt, I think Matt's got a good handle on it, is we're pretty much out of money in highway. We don't have a lot of money, and we got some bridges, we got some shit ahead of us, but that's the way it's gonna be for many years.
Yeah, I got the feeling it is.
I mean, we just know that.
The other part of when you're throwing those numbers out, and like you said, they can go over there. Keep in mind, a year from now, 2 million of those is gonna disappear in Lincoln and I, because in those figures is when we remodeled the courthouse, there was 2 bonds that were sold. One of those was paid off. The other one is something, it's called a sinking fund bond, where we have collected the tax. We've collected the tax and all we paid is the interest. It's like a balloon payment. So in January or February, I think it's January of 2026, we gotta make the principal payment. And right now, we've got $2 million sitting in those funds, waiting to cut that check. Well, that's gonna, you're gonna say, holy shit, well, last month we had $2 million more, where'd that go?
Well, if we get $20 million worth of expense and they say we want 6 months, that's $12 million. And now after that 2 will be at 12. Right?
Yeah.
That's 5th grade math.
Yeah, I think you can kind of take a lot of the highway project stuff out of there though, but, but even at the general fund, I mean, when you look at 50% of 7 million, we better be banking 3.5 to 4 just to make her through to July. Cause so much of this general fund is reliant on property tax. Highway's a little different, you know, they get that construction.
Different buckets of money coming.
You got more to add, Carl?
No, I don't have anything else.
The one thing, and I'll just bring it up, and, I don't know that it needs to be addressed tomorrow, but I did, and I visited a little bit with Carl, is there's items potentially in the budget in certain departments. If we accept the budget as it is, I don't believe that necessarily means we've okayed and signed the check for them to spend it.
Ah, that's your guys's.
And I think we need to address that, and I'll use an example. There's $20,000 in Don's budget for furniture. Well, like I said, we just approved $8,400 and some dollars for 3 offices. She wants 20 for one. If we approve that, she's gotta understand we didn't sign that check.
We had a discussion with her, Carl, you wanna touch on that? Go ahead, did she reach out to Cooper's?
I've given her all the information to reach out to Coopers.
Okay.
So she is gonna look at,
And this wouldn't be just, I don't wanna zero in on Dawn and her furniture, but it would be like computers. There's stuff in the budget, I think our department heads need to realize that we're in this together. Now we have a
Can I
coordinator.
make a recommendation to you then, because department heads follow what happens in board meetings?
Yeah,
When the highway department walks in here, the only times I've heard when they request something, well, is it in your budget? Well, then, yeah, I suppose. Don't say that then. You know, when you're a piece of equipment, so, well, did you put it in your budget? Well, yeah, oh, okay.
Well-
And then don't say that to one department and then tell everyone else.
Yeah. Exactly.
some of what I discussed when I did discuss, cause we met with, environmental services as well,
Yep,
is that
Yeah, there's a vehicle in theirs.
there is a vehicle in that one as well, and we did discuss that as well. But we discussed that if you want a vehicle, or if you want new desks, if you want something else, come to the board first and ask permission and say, I would like to put new desks and I'd like a vehicle purchase. I'd like to put it in my 25 budget. It's a lot easier to approve the budget at the end of the year when you say, yep, they came, they asked for it, and we can move forward with it in 2025. And I think everybody is very used to just put it in your budget and
once we approve,
So, and I'm not saying this is the amount it needs to be, and I'm not saying this even needs to take place, but let me ask the board right here, the other 4. What is our policy on what amount needs to be approved? It's been approved in the budget, but before you order it, let's just say order it, you need to come back to the board and have it approved. What's that dollar figure?
I agree 100%. It's kind of where I was going.
So we don't, I can tell you for a fact that at Western Prairie, it's been approved, it's in the budget, but it's over $5,000 that's going to the board. No ifs, ands, or buts.
And that's not a bad policy to
And
have.
maybe that gets to be something we do.
And that's a whole separate side note of that is, that's a good thing for the state auditors. I mean, yeah, it was just you on that call, right, Kevin?
Yeah.
For audit. That's a very good policy to have that they would know about too,
And
you know, because they ask about those.
there's, I can tell you there's frustration, but we follow that.
The other piece is, and I agree with Chad, however, on the highway department, and I know since our cyber event, it's kind of went to shit, but we have required them to put together a spreadsheet and a plan.
Yeah.
So when they say it's a $280,000 truck and it's in this year, is it in the budget? And Ken will ask it to Pat.
Yeah.
Where's your spreadsheet? How many times have you heard me? So, but I do agree with you, they come with big items and, but I think we're gonna have this discussion tomorrow and I just wanted to bring it up tonight, so you're aware of it.
But we never really gave anybody a chance to answer your question of if we wanna cut the budget, the levy request or not. This is my 8th time sitting here,
I got it.
and the first couple of times I didn't do it, but I've always said, hey, if we take 1% off, like Chad's first option, we don't cut budgets, but we took 1% off that levy. It's granted, we gotta wait 2 years to find out, but are we going backwards or not?
$82,000, is it, is someone, you like that idea with?
I've proposed it a number of times, but I'm not gonna die on that hill either.
You had something, Dwight.
Well, two things. I gotta say, when I was the sheriff, that when I would buy stuff, when we'd buy stuff, if it was over like 5,000, like Troy said, we were asking the board to, you know, when we were gonna buy a squad or something, we would come to the board and ask them. It was in our budget, and I don't recall they ever said no, but at least it was in there.
We talked about it.
Yeah, oh yeah. Yeah, because, so I don't think that's a bad idea at all.
Should be a threshold though,
Yeah.
$5,000, I agree with that.
Yeah.
Chad, what do you think? You like Troy's idea?
Yeah, I like it, it's good.
Which idea though?
The one cutting the 3.8?
Oh, I'm still stuck on Dwight.
Yeah, I was gonna say, cause that, let's be sure which idea we're talking about, cause there's two of them there.
Well, I agree with.
I like both of them, let's just say that.
All right, Carl?
You know, and the other thing that is not factored into the budget as well is the Inflation Act money. So, the Inflation Reduction Act,
Well, you're talking for the,
Sheriff's building.
for the sheriff,
Yep.
for the LSC.
that's 300 grand, isn't it?
So, yeah, Apex is still working on steps 1 and 2 to finish up that grant. There still needs to be the 990 for funds that we would need to supply. For that right now, Jim estimated that it was $11,000 to $12,000 to fill for the 990 form. So the total grant amount would have been 370,000 less the $63,000 paid to Apex.
Yeah.
So that would be about a $300,000.
So that's yet to come in, and that could come in as to general revenue?
The
We've already-
Inflation Reduction Act
Yeah.
money?
That wouldn't be like a bond.
No, it's a credit.
It's a credit.
No. Or not, it would be a direct payment to the county.
So generally, would you agree with Troy's idea with what we've heard tonight?
Yes, I mean,
I wouldn't have a problem with it.
I'll adjourn the meeting at 6:49.
Okay. You wanna go watch a football game or what?
Want to go watch football?
Okay.
I think we can stay a while yet.
Well,
I got a little
Wait, do
bit.
you have more? How about-
no. I'm good. I'm just gonna tell you that at some point in time, we're gonna have to have a discussion on the bond proceeds. Because we're winding down, and there will be funds left in the bond proceed.
Yeah.
Remember, we paid. We're all.
Klein McCarthy, and we paid all the soft costs and all that stuff ahead of time.